Wednesday, April 1st, and today I wanted to do something a little bit different. This week, we've talked about it in the last episode. The market continues to trade the headlines, and we've talked about the risk in that. Don't want to repeat it, so I wanted to dig into something a little bit deeper. And I ran across a report that Deutsche Bank did regarding the US dollar as the world reserve currency, which I found fascinating and informative. So let's jump into that, all right? Quickly. Going back to World War II, at the end of World War II, there was something called the Bretton Woods Agreement that established the US dollar as the world reserve currency. It pegged the dollar to gold at $35 an ounce. How cool is that these days to have that? How nice it would be. And then it also pegged the other currencies of the world to the US dollar. So that lasted about 20 years. And then in the late 60s, there was heavy spending by the US government on the Vietnam War, on domestic programs. Other countries started to get uncomfortable and they wanted gold back in exchange for their dollars. And so that occurred for a couple of years. And then in the early 70s, the US President Richard Nixon said, enough of that. He ended that convertibility of gold and also essentially just canceled the Bretton Woods Agreement. A couple of years after that, in 1973, there was the Yom Kippur War in which Egypt and Syria attacked Israel, and the US gave military support to Israel. And in response, there were some of the oil OPEC members that created the embargo against the United States, the oil embargo. And man, I remember that. I remember sitting in the car for hours waiting for gas with my mom. And of course, there was all kinds of economic consequences. But during that time, Saudi Arabia got really nervous about an invasion by Russia, and also a regional war. And so there was a deal that was struck between Saudi Arabia and the United States. Saudi Arabia agreed to price its oil exports exclusively in dollars and reinvest the profits, the surplus profits, back into US Treasury bonds. And within 2 years, all of the other OPEC countries had adopted this petrodollar system and created that petrodollar. And so then any country that wanted to buy oil from OPEC first had to acquire US dollars so that they could buy the oil. This created a massive perpetual cycle for the United States and for our currency. And a few effects from this was that the US government then started running huge deficits, knowing that foreign nations needed dollars to buy energy and they needed to hold US dollar reserves. So they essentially bought our US debt and financed US government spending. This also kept interest rates lower in the United States. And since there was this constant buying of US treasuries, it kept US borrowing costs low. The US was able to print a lot of money, but instead of in printing that money, it was going all over the world, and we were effectively exporting inflation with all of that printed money. So those were a few advantages back then. And so let's jump forward to today. A little bit of history, and now we're back to today. So there is pressure on that system, on the petrodollar system, all right? China buys 85% of the oil from the Middle East. Saudi Arabia exports 4 times more oil to China than it does the United States. So more and more sales are being made in Chinese currency, and that is giving rise to the Petroyuan, which is the currency, and putting pressure on the petrodollar. And oil is the foundation of the US dollar as the reserve currency of the world. So we've talked about in the past couple of episodes the global supply chain that begins with oil and how it permeates everything. So everything that's manufactured, everything is transported in US dollars. The goods are delivered, they're invoiced in US dollars. Then there's reinvestment in US dollars, in stocks and bonds. This is a recurring cycle. But today, there is that economic pressure, specifically from China, but there's also then now the military question. The Gulf states are being attacked, and there's a re-examination of the security guarantees that the US has made in the past over the last 50 years. And China manufactures and sells more and more goods, and those are being traded in yuan. The geopolitical sanctions that the US is imposing on countries like Russia and Iran are encouraging those countries to diversify out of the dollar, because that, of course, is locking up their assets. And then there is a few other items of pressure, points of pressure, that there's the energy transition from oil into electrification and renewables, and maybe not in the United States, but definitely around the rest of the world. It's making more and more sense and a lot of headway. And so that puts even more pressure on oil and on the value of the US dollar as the petrodollar. And then, as far as the US, the United States energy production, both oil and natural gas, that's mostly consumed in the United States, whereas the Middle East energy, oil and gas, essentially goes to much more of the rest of the world ex-US. And so, again, that's something else that's putting pressure on the petrodollar, because those countries are saying, why should we exchange in dollars when we can exchange directly with the Middle East? And lastly, I just want to say that there have been reports by Reuters and also the Associated Press that we've talked about a few ships, some of the ships that are going in and out of the Strait of Hormuz, and that they are paying an actual toll to a tax to do so, and that those Reuters AP have investigated and found that those ships are actually paying that toll in Chinese yuan, which is interesting as well. So just a little bit of an anecdote. And so look, this is not the US reserve currency as the world's reserve currency is not going to end tomorrow. It's not going to end next year. And we all like to think in absolutes, right? We all like to think in black and white because I don't know, it makes things easier. It kind of is easier to make sense of the world that way. But this is not, in my opinion, absolutely, there's no way that if there is a change in the reserve currency, it's going to take decades and decades. Look, it's been 50 years, 75 years since this all has been in motion. And so, but it is absolutely, uh, giving rise to the yuan as a second reserve currency in the world. So this was a fascinating report. I added to it and did some more research as well. Thank you to uh, Deutsche Bank. And I hope you found this interesting. I wanted to talk about something other than all of the war news, which you can get anywhere you want right now. But this is something going on behind the scenes, but it's a little bit of history, a little bit of economics, but it absolutely spills into everything going on currently with the US and Israel and Iran and the Middle East and oil and energy and the US dollar, the petrodollar. So there you go. I will talk to you soon. And here we go. We're into April. On we go. All right. And one last reminder, please be extra careful when it comes to trading headlines. It is so risky. We've talked about it before, and that's all I'm going to say as a reminder. So I'll talk to you guys soon. Thanks. Bye-bye.